Hello, traders. It's 8:02 a.m. Chicago time on Tuesday, the 26th of May, 2020. Thanks for joining us today on episode number 1762. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk-on sentiment across the board here. The European markets have been pushing highs all evening. We have crude leading the pack up 4%, up $1.36, back at 34.65, which is actually a key area up here. Second test now. The Russell is leading the indices up 52 points, or 3.84%. The Dow Jones up 618 points, and the futures up 2.5%. The S&P is up 64.5 points, 2.18%, and the Nasdaq up 152 and a quarter points, 1.62%. The dollar is weakest. The dollar's off 81 cents, trading at 99.08 on the U.S. dollar index. The bonds are off a handle and 10 ticks. Gold is off $11.30. Clearly risk on, and we are just in a big gap, and we're trading inside of the range of March 9th, is it? Let me see the date. Just typed it out. March 5th. And that's where we are. We've basically taken back the beginning, almost the beginning of the sell-off as a result of COVID-19. That's how strong this market is. And one thing I want to remind you about is not to argue with it. Don't argue with the market. It is what it is. It's a forward-looking mechanism, and it knows better than we do. It's the master. We are the followers of it, and that's all there is to it. There's no sense in arguing with it. And so that's where we stand. The pop higher this morning is investors are looking for. Investors are responding to a welcome compromise of more stimulus in China and gradual reopening of the global economy. And oil prices were supported by falling supplies by OPEC cutting production, and the number of U.S. and Canadian rigs dropped to record lows for the third week running. A flurry of housing market indicators is due today and have already passed. So overall, pretty decent earnings, and we also have a lot of states now and a lot of cities across the globe working on their phasing to bring things back to normal. And of course, the market's responding to that. If it's able to hold up as well as it did during the worst of it, then it's likely to pop higher during the recovery. So we're above 3,000 in the S&P, trading at 3017 with a high of 3018 and a quarter. And all things look good, I guess. So that's the overall picture today. In today's session, we got the GfK consumer confidence out of Germany. It's one of the key figures today. The consensus was for negative 18.3, came in at negative 18.9, slightly worse. Chicago Fed National Activity Index came in at negative 16.74, forecast at negative 3. We have consumer confidence at 10 for May, expecting 87.5. We have new home sales expecting negative 21.9% for April in home sales. And that's month on month. And then the rest of the day has Fed's Kashkari at 1 p.m. and Bank of Canada's Poloz at 5 p.m. And in Australia, construction work done Q on Q at 9:30. Industrial profits in China year on year at 9:30 as well. That's what's ahead for today. What was expected on Friday versus what we got? Let's get this straight. Sorry, my mouse was going crazy on Friday. So unfortunately, scenario 2 was a bit of a mess, as you can see there. The primary scenario on Friday is a dip. We're looking for a dip into 32, potentially 24, but ultimately was looking for a push towards 2960, 2960 for a market that finishes near highs. As you see here, just follow the green line or the yellow brick road, whichever one you like. So that's what we expected on Friday. Dip down into either 32 or 24, then a push into 62 or so, and then finishing near highs. Let's see what we got. Here's what actually happened on Friday. We pushed down into 30, dipped down into 28 and a quarter, higher low at 28.75, and then we break the IB on the upside range extension up, and we finish with a high of 54. Didn't quite get to 60. Didn't quite get to the 57 area. This remember Friday I talked about this MC low volume node at 56 or so. Couldn't quite get there. So we had scenario one on Friday, pretty much on point. Did miss the test at the 24 below, but it's close enough for what we do. So that carries us into what we had on Friday is quite a balanced profile. You can see here, very bulky, a lot of price discovery across the board, and a pretty light volume, 949,000 as expected. Remember, Friday brings us into the holiday yesterday, and so what we have is week high, range extension up, a profile that is pretty fat, active price discovery across the board, and incomplete auction to the buy side. We expect this to continue to move up on the reopen, which it did on Sunday, and then it was carried forward after the session closed yesterday at 1 p.m. Eastern. In terms of the overnight session, you'll notice on my chart I deleted the action from yesterday. Yesterday's action was wiped out, and I'm simply working with what was generated on the reopen at 5 o'clock. And it's a quiet Asian session, and then Europe comes in right in here, and we have just been holding tight to this upper end of the range after pushing through 3,000. And we are just sitting tight up here with a P-shaped profile, a short squeeze profile. We have pushed pretty hard into the highs. We've got 313,000 contracts, which is relatively heavy, and we're not letting go of higher prices. We're accepting higher prices so far. You can see the delta is playing along. We've got a relatively strong delta for an extended trading hour session. We're just not backing off of the buying, and this is likely to continue into the open. There are a lot of shorts that are likely to continue to get squeezed. We talked about this early last week, that the way this is setting up, it's likely to continue to squeeze. However, I did expect it to top out, pull back a little bit before the next leg up, but the news is that we're opening the country back up, so the market is responding to that. On the let me see. On the order flow front, there have been really decent collisions on the buy side while lifting in the overnight session. You can see these strong deltas down here, these blue lines. We don't see any red. This is really aggressive buying throughout the overnight session, and we continue to squeeze higher. It's not letting up, and it looks like it is really pushing into this 30-20 area, which is one of the key areas from way back. 30-20, you could see that liquidity has been carrying over throughout the evening, 30.20, 30.25. I expect it to top out here on the open. I expect it to kind of shove through 30.20 and stall out in the 30.25 area, 30.27. This is my next stock zone up, and I expect it to top out up here and kind of pull back a little bit. Um, but above us, it's relatively well defined. Below, there are chunks here and there. Of course, the 3000 has some bids on it, as well as the 2990, 91 area and 2980, but it's relatively thin this morning in terms of standing liquidity. Above 3040 is still well offered. So not too much we can glean from the order flow here and the depth. I mean, if I go way out beyond the typical 10 prices up, 10 prices down, you could see that a lot of the liquidity is concentrated in the book on the inside as we would normally expect, and it's relatively clear to 3065 and 3082.50 above. So I can't read too much into that, but from an order flow perspective, it does look heavy on the offer, which doesn't mean it'll stop here. This doesn't make that resistance. It just means that it's likely to stall out on the open, given the run that it's had, and turn over in this area, in my opinion. So that's where we stand. Let's take a look at what we're expecting for today. For today, pretty straightforward. Gap rules apply. Likely to have a gap and go situation early. The gap zone is expected to remain open. The probability of a gap fill is somewhere around 9.8% or something like that. I looked at it last night, but not this morning. But we're pushing against the overnight high. The expectation is an open that really squeezes. I expect it to really fight in this area. And then I'm looking for it to roll over and come back over to the point of control, the overnight point of control, and squeeze back to 3,000 before it stalls out. Expecting the 29.98, not 29.93 area to hold up before we finish above 3,000 and stay there, migrating our price action and value, accepted value higher no matter what today. So I'm looking forward again to stall out above and to roll over and retest the 3,000. It's kind of running away. The secondary scenario is an open that pulls back, that immediately pulls back, an open auction that pulls back into the overnight point of control to around the 3,000 area, impulses up, comes back to the open, and then squeezes into the 27 and potentially pushing to the 36. Not likely though, but that's the secondary scenario. The primary scenario though, really expecting this move up to continue and then for it to stall out and then sellers to step in. There's a third scenario because of the gap and where we are. The expectation is, and on the tertiary scenario, is a push up, open, test, up, drive down, drive right through to 3,000 and push right into this 93 and attain the 84 on a drive down for a bounce into the close. That's scenario 3. That is an overbought or an excess high scenario. Excess high scenario, and so I'm looking for responsive. It's really important, given that we have a gap, it's really, really important for us to watch to see if it just does not have any power to the downside. If sellers cannot easily shove buyers out of the way, squeeze buyers and cause liquidation of the longs, We may see a day that just runs higher and just continues running, much to everyone's surprise. In that case, we are looking at the pushing into the 36 62 36 62 82, but that's that's pretty far up, but that's the scenario 4. So pay attention to how it treats the gap. Is it a gap and go situation? Is it a response? Do we get responders early? In other words, do we get sellers coming into this value range? Remember, this is a well traded balanced zone. We have a gap beneath us. It's a well traded balanced zone, and in this area, the 29.48 is key. But do we come back into the zone or not? And that's what I'm watching for this morning. Good luck, and value should be higher. Good luck, and I'll catch you tomorrow morning. Take care.